Welcome to the August 2022 Metro Phoenix First-Time Homebuyer Market Update. This is part of our Your Way Home program, helping everyday heroes become homeowners. Today, as part of the market update, we'll talk about market rents, going home prices, what mortgage rates are doing, and a look at your local market. So let's start with market rents. According to Realtor.com, who looks at the largest metro areas each month, they're showing the median two-bedroom rental in the Phoenix area goes for $1,784 a month. That's actually a decrease year over year of 1.2%. So where do we anticipate rents to go over the next year? Well, that's the next piece here, rent forecasts. According to Realtor.com and their economists, they are predicting a 7.1% increase in rents nationwide over the next 12 months. Now, that's not specific to the Phoenix area, but it does give us a general idea of where they think rents are headed over the next year, which is up. So as we consider that and keep that in mind, what we want to look at next are market prices, market home prices. Well, in the Phoenix metro area, the median home price is at $445,000 with the average sales price of $549,300. Now, I prefer to look at the median home price. Median home prices mean that 50% of the market was sold for over that, and 50% of the market was sold for under that. So it really gives us that middle of the market feeling. And according to the National Association of Realtors, on average, first-time home buyers buy homes that are 82.6% of that median home price, which means that if we follow that same number in the Phoenix area, the average first-time home buyer is in a price point of around $367,570. So again, we can see that home prices have gone up 9.9%, maybe not as much as it went up the year before, but still up pretty significantly. So where are home prices headed? So let's take a look at the price forecast. According to the National Association of Realtors, NAR, what we can see is that in 2023, they're predicting a 1.2% increase in home prices, which will be a significant cool down over what we have seen this year, last year, and the year before. So in 2020, we saw a 9.1% nationwide average increase in home prices. 2021, look at that, 18.2% increase. They're anticipating that through 2022, we'll see an average of 9.6%. And then again in 2023, they're anticipating an increase of 1.2%. What don't you see here? A decline in home prices. We are not in a housing bubble. There's too many market dynamics that are playing into this to see a price decrease over time. So we are looking at a 1.2% anticipated increase in home prices over the next year. So the next thing that we want to look at then are mortgage rates. What's happening with mortgage rates? Well, right now, if you are looking at a 10% down payment on a $400,000 loan here in Arizona, at an average credit score of around 720, you're looking at rates right around that 7% mark. Now, that's high in comparison to what we've seen over the last year, but really quite on par with what the average is historically over time. But as we've gotten used to rates in the 2s, 3s, 4s, even the 5s, 7 seems a bit high. So do we anticipate that rates are going to stay the same or drop? What's the anticipated forecast for rates? Well, according to Mortgage Reports, who kind of consolidates all the data from the different sources to look at what the forecasts are, Freddie Mac is anticipating 5.4, MBA 5.5, Fannie Mae 5.7, Wells Fargo at 5.7, National Association of Realtors at 6 for an average prediction of rates at 5.66% by the end of the year. Now, will that happen? Who knows? But what might cause rates to drop down to 5.66%, considering we've seen such a rapid increase in interest rates over the last 6 months to a year? Well, mortgage rates are tied to inflation. So as inflation increases, like we kind of see here, there's a steady increase. Well, inflation has also been steadily increasing. And as inflation goes up, well, so do mortgage rates. As the Fed does what they need to do to slow the economy by increasing short-term interest rates on things like auto loans, credit cards, commercial loans, things like that, what we're going to see is the economy is going to slow. People are going to be spending less money. And when there's less spending, there is going to be lower prices, which is going to decrease inflation. And as that happens, then what I anticipate is that mortgage rates are going to come down right along with that inflation. So I do anticipate that we'll see lower rates. Whether they'll hit 5.66% or not sure, but we'll have to see what happens. So now let's take a look at the local market spotlight. For the Phoenix metro area, Realtor.com has kind of a cool trend analysis that you can look at here. They're showing that the current market temperature in the Phoenix area is considered slightly cool, with a hotness index of 32, almost 33 at a scale of 100, showing that we're on the cooler side of things. And as you can see here in 2021, the peak, it was right up there, probably around that 80 hotness index. So we've come down quite a bit here since the peak. But if you have any questions about buying a home or would like to buy a home in Arizona in the next 12 months, we invite you to join Your Way Home. It's our way of providing you with all the accurate resources to help you in positioning you so that you can make a home purchase a reality. I truly believe that now is a fantastic time to buy a home. You could take advantage of the cooler market. While rates are a little bit higher, there's going to be less buyer demand, but we're still anticipating that prices will go up. So if you can get into a home now while there's less demand and see higher prices over the next year, when those rates come back down, you'll be able to refinance and you will have locked in that monthly payment at a lower amount than what other people will be able to get if they were to wait because of the increased demand that will likely occur once rates drop back down. So there you have it. If you have any questions, let us know. Otherwise, thanks for watching.